Hi there. In this screencast, we'll look at using foreign currency in Sage 50. So the first thing I'll do is add an account to handle currency fluctuations. So the purpose of this account is when we purchase an item on account and then we pay for that item later, there will be an exchange rate fluctuation. So the amount that we purchase for will be the amount that we pay. So this account handles all of that stuff. So I'm going to go to Company, Chart of Accounts, and I'm going to create 5050. You could use whatever number you like for your 5000s. And I'll call this Currency Exchange and Rounding. And for class options, I'll just use general and admin expense. And I choose save and close. Now I'm going to link this account to that purpose that I mentioned. So setup, settings, company, currency. We're going to choose this. I want to enter transactions using foreign currencies. Our home currency is Canadian dollars, and I'm going to track exchanging and rounding in that 5050 account that I just created. Incidentally called the same thing as the purpose. The foreign currency we'll look at is US dollars. And we can just leave all of these at the default. And I'll go ahead and add an exchange rate as well. So United States dollars, generally 1 day is good. I'm just going to display the reminder for a week. Depending on how many foreign currency transactions you have, you may want to increase that or decrease it. A good currency exchange website is xe.com. And this is for February 19th. And the exchange rate was apparently 1.15. And I'll choose OK. So I'm done with my foreign currency setup. I'm going to create a foreign currency bank account next, so that we don't have to buy and sell at different rates all of the time, which will cost us money. So this will save us a bit of money. 1085 is the number I'm using. RBC USD bank account is the name I'll choose. And class, let's just make sure that we have the right, yep, subgroup account. That is their subtotaled there. And class options, bank. And institution is Royal Bank. And you would add all of your information here. Most important step here, however, is choosing USD, US dollars, and save and close. So now that we've added that bank account, we're just going to link this bank account to foreign purchases and sales. So setup settings, payables, linked accounts, invoices and payments, United States dollars, 1085. And same thing on the receivable side. And OK. All right, I'm going to just quickly transfer some money from my checking account into that USD account so that we can make purchases and sales using that account. So I'm just going to go to banking and transfer funds. And this is on February 19th again. And I'm transferring from RBC checking to now notice I don't see my US account because I neglected to choose the currency here. Once I do that, I'll see it. There we are. And we're transferring 2,000 USD. And I'll go ahead and post. The next thing I'll do is set up a foreign supplier, price some inventory for our customers, set up a foreign customer, and then purchase some items from those foreign from that foreign supplier and sell the items to the foreign customer. We'll receive the payment later from our customer, so we'll see that currency fluctuation. So I'll go to payables. I'll create a new supplier, San Fran Art Decor. And they've been a supplier since February 19th. And under the options, there's the currency. And they're giving us a 2% discount if we pay within 10 days, and amounts are due in 30 days. The discount is on the net, not the gross, and we're going to print their contact on the checks. Save and close. I'll quickly do the same thing for our customer. It's receivables. Create a new customer. Broadway Deco Art. And they've been a customer since February 19th as well. Everything is happening in one day. The options, again, currency USD. And we're going to give them a 1% discount if they pay within 15 days. The net amount is due in 30. Now if you pop over to the statistics tab, you'll see that we have credit limits in both Canadian and US dollars. So we're going to give them 11,000 and 10,000 respectively. And save and close. Now I'm going to quickly price an inventory item that we're selling to our US customer. So for all of the inventory items that you sell to US customers, you can add US prices for those items. And the reason we do that is so that the prices aren't subject to the exchange rate. That is, if a customer buys an item at one exchange rate and then goes and buys that same item a week later, they may end up paying more and they will complain. So we just want to have a set price for all of those items that we sell to US customers. So that's inventory and services. I'm going to change my 105. Under pricing, you notice we now have a little drop down here. So I'm going to make that fixed for all three price levels. And we're going to charge them 190 for all three. And save and close. All right, let's go ahead and make a purchase. So I'm going to buy some of those 105s. Then I'm going to sell some of those 105s, and then I'll be paid for the sale later. It's basically the scenario. So I'll go to payables, San Fran, there they are. I'm going to create an invoice. We're going to pay with a check right away. Notice that the USD bank account gets selected because of that work we did in Setup Settings Payables. And the invoice is 1115. We can add a prefix if we want to lean out our reports. And this is on the 28th. Exchange rate. So I popped into the exchange rate and I got this little dialog. Sometimes this pops up, sometimes this doesn't. I'm not sure why that happens. Seems like it's depends on how the wind blows, but that just might be my perception. So our exchange rate was 1.12, and we're going to make that the default rate for the 28th. So we had originally entered 1.15 for the 19th. We changed the date, so it prompted us to add a new exchange rate. And okay. And we're buying some 105s, 8 of those. And notice it takes the average price that we paid for 105s in the past and multiplies it by 1.12. So we are only paying $108 for that. No tax in my region if I'm purchasing from another country, and they're giving us a 2% discount. So that popped in automatically based on the terms because we're paying them right away. They're also charging us $45 freight, and we should have a total in USD of 909. Now if I go ahead and look at the report here, you'll see that everything gets converted to the home currency and under the hood. So we'll go ahead and post that. And yes, and I'm going to go ahead and do something similar on the receivable side. So now I'm going to sell an item to Broadway, sell those 105s. They're going to pay later in the situation. So we'll see what happens in that. So February 28th, exchange rate should still be the same if it's the same day. We don't generally change the exchange rate from day to day. And they're buying those 105s we just purchased. The base price pops in again from the US price for that 105 that we just recently changed. And we're charging them $40 freight for those 8 items. And I'll go ahead and post. So now let's see what that currency fluctuation is all about. So we're going to just quickly advance the session date to March 31st. And Broadway Art Decor is now paying for those items that they purchased on account. So I'm going to twirl Broadway, receive payments. It is now March 11th. And when we changed the date, it prompted us for a new exchange rate, which is 1.108, and I'll make that the default rate. And okay, and they're paying us for the full amount minus the discount, so they're paying us within 15 days, so they're subject to a discount. And if we look at the report, you see currency exchange and rounding, that account that we created and linked is now being debited by that difference. I guess it's a loss since it's an expense and being debited for that difference in the exchange rate when we sold the item and then when we were paid for the item. And we'll go ahead and post. And I'm done with this. So that's multiple currencies using Sage 50. Thanks so much for watching.